Obviously, we've had quite a run in the crypto markets in the last month. I mean, the whole crypto market cap has gone up 30% in less than a month. I mean, that is incredible. Think about if the stock market did that. That would be insane, right? Those gains are just nuts. Now, the thing is that I've been in crypto long enough to know that that is awesome and that is positive. We can still move forward, but I'm always skeptical and a little worried about a pullback. And now I'm seeing the market. There's some froth in the market, and there's some things that I look at to see, hey, should I prepare for a pullback? And the answer is yes, you should always be prepared for a pullback. But what should I do about it right now? So we're going to look at some of these things that I look at when I get worried there might be a pullback, and some of the things that I do to be prepared for it. Now, with that, I am not a financial advisor. I'm just showing you the things that I'm doing. Do not do what I do. If you do want to do what I do, don't do it because I did it. Do it because you've done your own research. It makes the most sense to you and that you've made the decision to do that. So it's not on me. It's on you. Anything you do, take responsibility. It's your actions, not mine. So with that, if you're not a subscriber, please like, subscribe, share, do all those things. I'd love to hear from you in the comments if you found any value in this video or not. If you liked it, like it at the end. And with that, let's just get going. So we're talking about the indicators that I use to see if a pullback is imminent, because we've had quite a run up. If you look at where we are right now, this is the total market capitalization of crypto. And in the last run up, we got up to about 3 trillion and change in the total market cap. That's if you take every single outstanding bit of crypto out there, there's about $3 trillion worth. If you take the amount of outstanding shares times the price, there you go. That's how you get market cap. And right now we've surpassed that. And if you use the Fibonacci retracement tool, I mean, we are sitting right here, somewhere between the 1 and the 1,618. So we've gone well above where we were last market. We're almost at $4 trillion, almost $1 trillion more. And if you look at that in real terms, I mean, you're talking about almost 30% higher than we did last market. Already we are there. And if you look at where we've gone in the last, since this swing market low to where we are now, we're up 71% from where we were in April. 71% since April. And we are up, just this June. I mean, we're up almost 30% since about a month ago. So those kind of numbers are great. And I love experiencing that as a trader, as a holder. But I also think, well, how will I know if this market's going to turn against me? Now, first rule, I don't know if you want to put them in order, but one of the rules that you have to follow as a crypto enthusiast, as a trader, as a hodler, some people say, well, I'll just hold it through the dips and the thing. That's great. But if you're working on leverage or you're trading the market, it's nice to know or have an thought that the market might go down. You should always have that thought that the market can pull back, because you have to prepare yourself. Take profits along the way. My dad always said, no one's gone broke taking profits. You go broke by round tripping your bags back to zero or to getting liquidated on margin. That's how you go broke. That's why 95% of traders don't make money trading. This is one of the indicators that I look at. It's the Bitcoin Fear and Greed Index. People are typically greedy when things are going well. And that's when big manipulators come in, because the sentiment is, oh, everything is great. It's great. And bap, you get smacked on the back of the head, and someone comes in and just wrecks the market. Or I should say a conglomerate of things come in and just wreck the market. You get liquidated, and someone else made money on the other side of that trade. And this is when we're in areas of greed, yes, you can see there's prolonged times where we had, if you look at this, it's from, let's see, right here, 10/16/2020, all the way up to about 3 months later, we had a run up, and all this time there was basically a green or greed index in there. Same thing, these run ups. But look, there at some point the party is over, and then there's a sell off, right? So this is just one of the things I look. The higher this number is, the more risk. It's not guaranteed. It's just an indicator of sorts. There's more risk of a pullback the better the sentiment is. All right. Another thing I look at is the liquidation charts. Because the liquidation charts show you where people are betting, and someone's going to see opportunity here. If you look at the Bitcoin 30-day on the liquidation charts, if I go back to 104, which is it's a significant 20% drop, 15-20% drop, but there is almost $19 billion of long leverage sitting there looking to be liquidated or hoping not to be liquidated. But if you look at the adverse of that, if you go up all the way to 133, there's only 6 billion. But 6 billion is still a lot of money, but it pales in comparison to 20 billion, right? What was that? 19 billion. So a lot of people are long, which means there's a lot of liquidity to chase here. There's a lot of dollars to chase here through manipulation. I'm not saying that the exchanges manipulate, but this is money, on different exchanges on leverage. They're protected, but this is a lot of money to go after. That's Bitcoin. Look at XRP. The money is, betting at XRP. This is long leverage right here sitting. Just going back to 330, there's about 418 million versus if you go up, there's not a lot of shorts on the table. There's not a lot of shorts on the table as compared to the longs. So I'm not saying that the manipulators look at this and say, here's opportunity. But think about it. There's a lot of opportunity here in these long liquidations when you sit there. And sometimes you have to go back, cleanse this before you can go up. Let's look at total market cap again. So we have total market cap. We're sitting here. I'm going to look at a couple other indicators. I'm going to look at the MACD, the moving average convergence divergence. As you can see, we're peaking. If I pull this up, we're peaking on this. Yes, it can go down then go back up, but we're on the downswing here. I don't know if you can see that enough, but we're on the downswing of the moving the MACD, the moving average convergence divergence. It's like the momentum. This really shows momentum, and the momentum is trending on the downside. And this is the total market cap. That doesn't mean that some can go up while some go down. It's just saying that on average things are trending. It's trending. The momentum's trending away from rising and pulling more towards rising slowly or even potentially, not guaranteed, falling. Now, this doesn't mean you go put shorts on, because who knows? Bitcoin may go up and the rest of the market may go down. We may see a pull away from its dominance. Like right now, Bitcoin dominance is falling. Ethereum is rising rapidly, and others are rising, not quite to what Ethereum is. Money is flowing out of Bitcoin potentially and flowing back into Ethereum and others, but it's flowing into Ethereum at a higher rate, or people could be selling Bitcoin and new money could be coming in and buying Ethereum. Typically, that's not the way it works, but its potential is also there as well. So, so I look at these things and I say, okay, well, what's the market doing? What's going on out there with retail? Are people coming back? Is this because people are coming in off the street? So then I look at Google Trends. And I'm looking at Google Trends. This is the last 30 days, and you can see a real uptick in Google Trends of, the red is Bitcoin, blue is XRP, yellow is Ethereum. Even Ethereum is rising over the last 5 or 10 days or so. And XRP well outweighed the sentiment of Bitcoin, which, it did rise pretty fast. It's the third biggest crypto. It's a $205 billion market cap. So it's still a giant. Again, pales in comparison to Bitcoin, but had a lot more, the trend was much higher in XRP out there. There's a lot of hype on XRP, but that came down, and you could see the price follow that as well. We saw a real uptick in XRP, a very fast, violent move. I would call that fairly violent. From the last month, we went up to market high, market low of about 93%. 93%. difference. We were down here at, what was that, $1.89. We went up to $3.65, 93%. It almost doubled in a month. That's a pretty violent move. And, you saw a pullback, and now we're pushing back up. This morning, we're pushing back up. Now, do I think a pullback is coming in all of these things? Do I think a pullback is coming in crypto? There's a couple, before you look at pullbacks, you got to think about the market macro sentiment. What's going on in the bigger picture? Is there something right there right now that might force a pullback? Not that I can see out there. That doesn't mean a black swan event doesn't happen. A tweet doesn't go out. There's a bomb dropped somewhere. God forbid something negative in the geopolitical sphere. But on the macro environment, as far as economics or the finance or the economy goes, the economy is moving on in the United States fairly strongly. Where the jobless claims was not as high as predicted. Inflation was lower than expected on your producer price indexes, the cost to produce those goods. The consumer price index did rise up. I do believe that's retail, not retail in the terms of investors, but the corporations out there using the tariffs as a means to raise their prices. That's just capitalism. But I do think that that rose less than expected, but it still rose. So inflation is fairly tame. We do have an environment being set up for rate cuts within the Fed. The federal funds rate, the overnight rate, and that's the cost at which banks borrow money. If that's decreased, then it gets cheaper for the consumer to borrow money. If the consumer can borrow money cheaper, they will spend it. Trust me. And so, with that all being said, the macroeconomic picture looks fairly good. I think that we have a opportunity. Last week at the crypto week, the United States House passed the Genius Act. It got signed by President Trump. The other two bills, the Clarity Act, which is the Market Structure Act, and then the anti-CBDC bill also got passed passed by the House. Those two go back to the Senate, and it could be August where Clarity bill gets passed. That's what they're guessing. I'm guessing September, maybe even October, where President signs it. But still, these all are huge, huge pathways for crypto to be wildly accepted and successful. President Trump signed an executive order saying that crypto can be or should be involved, not should be, but can be involved in 401ks. There's a $9 trillion 401k market out there. Even if it gets a small bit of that, that's one more thing. You have companies like Strategy, Metaplanet, the list goes on. You have companies even doing Ethereum treasury companies now, the one that Tom Lee is involved with. So the macroeconomic picture looks fairly strong. But I just go back to this one thing, that if there's manipulators out there, the liquidations of longs are way more attractive than the liquidations of shorts. But the macro picture could push forward and could wreck those manipulators. I would love to see that happen. I hate manipulations, but it does happen in every market. XRP, moving strong. It's holding. It held. Yesterday I put out a video about this could be bad for XRP, and it could be. If it passes through the 340 and then again through the 330 mark, there's a lot of room to run down, but XRP has looked very strong. This is a very strong floor of support at 340. It's bounced off it, hasn't closed a candle underneath it yet, and so it looks strong for continuing to move up. I drew these squigglies a couple days ago before this happened. I said it could go up here, it could bounce along here and get rejected, or it could break above here, bounce off it, and go up. And I'm hoping, and this is a hoping, which is not a good strategy, that's what's going to happen. It's got a little tickle on my nose. All right, so look, here is, my grandmother used to say that means that money's coming your way. So hopefully that is true. But here's what I'm doing about it. You have to protect yourself. You have to protect yourself. Even if you're crushing it. I have these longs on, this is on BTCC, which I am, if you want to sign up for TCC, I've been trading on there for a couple years now. They've been around like 13 or 14 years. I've had great luck with them, but it is very risky stuff. Leverage trading is very risky. If you don't do it now, probably not the best time to jump into it. But if you're looking for a new avenue to do what you already done, this is the one that I use. But I have this long leverage trade on XRP. It's at a 15x. I put this on, when it was about $2.19. I've actually sold and bought, so my average open price now is about $2.96. We're sitting at $3.49. I'm up 268% currently. I've already pulled profits out of there. Sold. When it went down, I bought back in. I might have sold some of those, but I buy and sell on the way up. But I'm still up 288% on this one. And I've set my stop loss below, at around 2. No, that's not my stop loss. I've set a stop loss here at about 330. 329, because if it goes below there, I feel like it can run lower. So no matter what, at this point, I'm still going to make a decent return on this trade, even if it goes lower. And if it goes lower, I'll have sold, that trade out, and I can buy back in at a lower amount. And when I feel like it's going back up, one of the main indicators that I look at is the moving average convergence divergence. It's not a full safe plan, but it does help. Okay? So if I look at the MACD on this one, the MACD the momentum is rising. Doesn't mean it can't go down and go back up again. Doesn't mean it's going to go all the way down. Who knows? But you have a lot of momentum in this, but the momentum is starting to slow down. And you're kind of seeing that. Look at the shape of this candle. This is a daily candle. I mean, it went up. It's like almost like a dojo candle like this one, where it's just kind of like, it's consolidating in. We could move sideways. Why does it not work? Oh, there it is. We could move sideways and just trend sideways for a while. It could bounce down and go back up. It could bounce through here and we could go down. I mean, those are the three things that could happen. It's either going to go down, up, or stay the same. But it looks like we're going to consolidate until we have another push to the upside. And typically that comes with some kind of macro news right now. But the consolidation isn't necessarily a bad thing. If it can hold this 340, 330 zone for a while and then wait till there's that news, which might be a Fed rate drop. It might be XRP Ripple dropped case by the SEC. There could be a lot of things, but right now that's what I'm looking at. So all in all, I think that the market long term will continue to rise. If you look at the indicators out there, if you look at just the Fibonacci's, I mean, we probably have about another couple. I don't want to say another couple, but we could easily be at 442 on the 168 Fibonacci, almost $4.5 trillion. This market goes to another $500 billion or so, about almost $750 billion. That's $750 billion pushed back into this market. If the stablecoin bill, which has been put into law, that could pull in another, who knows how many trillions of dollars over the next couple of years. So right now, I do plan to have, I think this week, if we don't have any real positive sentiment or macroeconomic news, we could have a little bit more of a pullback. Watch your testing zones. Watch to see, if XRP drops below that 340, will it pass below 330? If it does, it could run all the way down to like $3. So just be very careful. If you're leveraged, look at taking some profits off the table. Not financial advice, not telling you what to do, because if you lose, you say, oh, why didn't you tell me to hold? Or I'm not telling you to do anything. But just do some research. Should you take profits off the table now? Are you up considerably? Not a bad time if you're up. You won't go broke. Yeah, don't have the FOMO. The FOMO is what keeps people poor. It's what keeps 95% of people losing trades. It keeps people from taking profits is the greed. Pigs get fat, hogs get slaughtered. With that, that's all I got. Hope you win. Talk to you next time.